at MK Investment Managers. Good afternoon, Sachin, and thanks for taking the time out and speaking with ET now. What is the sense of the market that you are making? About a month back, the scenario was completely different. We were at sub 16,000 levels. Oil was in excess of 130, and you had relentless selling by the FIIs. But a month later, all things seem to have changed, and we are now in 18,000 plus kind of a market right now.
Hi, Jayesh. Thank you so much for having me. And as you rightly said, the mood has turned positive now very clearly. I mean, sometime in the end of February, early March, we saw the Ukraine-Russia crisis, oil prices going through the roof. We are now seeing some cool off over there. We've already seen oil touching the low of 100 after 120. Now it's hovering between 100, 105, 106. But I think the important thing is that India has taken a good stand. We are already trying to source oil at much lower prices. Uh, so in that's one part. Second part is if you think about at the ground level, the domestic economy, there's a lot of vibrancy. Our exports have also uh, touched all-time high. We've crossed more than $400 billion. In fact, almost 415 to $420 billion, which is almost after 3-4 years of remaining in the range of $300 billion. It's a very significant jump. Our GST collections, our tax collections are also at all-time high. So clearly, the vibrancy as far as the overall domestic demand is very, very strong, and all the indicators are telling us that we are in an upcycle for an economic pickup. So we strongly believe that over the next 12 to 24 months, the domestic GDP growth is going to be very strong, and obviously that will have its impact across the sectors, which is why I think the market is very, very cognizant of that fact. And as we always say, market is truly long term. So keeping that in mind, I think the buoyancy is out there.
Right. Sachin, you have seen that there have been a lot of quarterly updates that have started coming in. For instance, yesterday after market hours, we had Federal Bank as well as Bajaj Finance come up with these quarterly updates. And earlier before that, it was HDFC Bank as well. So, it is more of the financials up until now that have shown their quarterly updates. Have you had a look at any of them? What is the sense you're getting on the financials front?
So you're absolutely right. I mean, we are already now from a low single digit of 5-6% credit growth at the aggregate credit growth at an industry level, which was there last year. We're already now touching 9 to 10%. And our sense is that we will see this growth even further accelerating in the next couple of quarters. So, from that perspective, we believe that the private sector banking actually is going to do much better. And the other important thing is that we all know that in the last 5, 6, 7 years now, the asset book has also been cleaned up. The net worth of most of the banks have got beefed up, so they have enough amount of fuel for future growth. So in all of that probably is culminating to say that the next 2-3 years are going to be very good for private sector banking, and also the valuations are also very reasonable for most of the private sector banking.
Right. Sachin, the next big trigger in the markets will, of course, be the earnings season, and we are, right into the next week itself. We will have the major IT companies reporting earnings. So, what is the Q4, earnings picture that you are painting in house? What sort of earnings growth are you expecting because as we have seen historically, eventually the earnings growth is translates into the market return that is generated over the long term.
Yes, Jay, you are absolutely right. And obviously we believe that Q4 results are going to be fairly decent because we've seen decent amount of vibrancy in terms of the demand side. If at all there is going to be some challenge on the margin side, because we've seen a humongous amount of cost pressure across the board from most of the raw materials, be it metals, be it energy, be it some of the polymers, I mean oil-based products. So all of that. But I think the important thing is that we have to really understand from the management commentary that which companies are able to take the price hikes in their end product prices. And that is where I think there's going to be the difference between the men and the boys that will actually get, because companies which will have pricing power will be able to manage their profitability over the next 1 or 2 quarters. And I'm sure markets will reward those companies.
Sachin, that's a very important point that you're making. Companies which are going to have pricing power, they will actually come out on top, and that's the trend that we have seen in the last couple of quarters. Despite the inflationary pressure, there have been certain companies which have been able to price their products and pass it on to customers. So, this particular season, what are essentially the sectors that you're looking out in terms of positive as well as negatives?
See, our sense is that I will tell you the sectors which are very sensitive to this cost pressure or cost price increases. Obviously, I think auto ancillaries and autos are going to be one big sector, because as we all understand that the raw material, the metal components is a very high portion of their revenue, and there has been a significant jump over there. So I think again there few companies will be able to pass through that to their customers, and few will not be able to pass through that. So that is one sector which is going to be very sensitive to this particular thing. I think the other is some of the FMCG companies, where again we've seen decent amount of food inflation, and how strong some of these brand franchises are is what we will be actually watching out for in this quarter and the next 1 or 2 quarters also. We've also seen some challenges with, I would say, some of the pharma companies, where again their imported raw materials from China, and because of logistic challenges, again it's going to be an expensive affair for them. So again there, only some of the branded pharma companies will be able to pass through some of these hikes, but companies which are in generic businesses should probably face some pressure.
Right, Sachin. We will let you go on that note. But once again, pleasure speaking with you, and thanks for taking the time out and
Thank you,
speaking
Josh.
with
Thank you.
ET now. On that note, let's slip into a